Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. All right, so we talked about how they've had difficulty getting through the 37.73 to 77 area. It continues to push lower. They've already taken out the low from yesterday. We're below the 20-day. We're below the 9-day. It's better to just get right into the hourly chart. So here in the hourly, you can see overnight, right here off Europe Open, touched the 20-day, the daily mid-band, and the hourly mid-band right up there at 79.75. They rejected it down. Now, they rejected it back through the 9-day, and we traded as low as 47 in the overnight. So recall our very quick discussion from yesterday. We talked about what was I interested in. I wanted to know where we were going to close relative to the green line, and that they wanted to take out the 20 and the 9 and make a run at weekly pivot, ideally close below weekly pivot, which kind of shifts the conversation next week into the bears being able to just hold serve on, the second part of that conversation is, why do you want to do that? I didn't get into this yesterday. You want to close below the weekly pivot if you're the bears because as you get into the next week, that weekly pivot's going to shift upward. You have higher prices. And you really didn't spend any time. I mean, here's the week. We haven't been below the weekly pivot. The thing's going up, okay? Unless they absolutely dump this market today, okay. Stranger things have happened, but unless they do, this weekly pivot is going to be higher than 36.1075. So you close it down here somewhere, and then it puts the bears in the position that the bulls were in this week, and that the bears were in a couple weeks before that, where you really just have to hold serve and say, look, I held the weekly pivot, but stayed above it for the whole week. Now, what do the bulls need to do? They need to not give up 36.10, try to get either the 9-day back or the 20-day back, and then they can go turn around and say, hey, look, yeah, okay, so it wasn't the perfect touch off the daily midband, and we fought over the daily midband, but isn't that really what we're supposed to do with the daily midband? And if that's the case and they can get above and stay above, it gets back to the way the tape typically trades in a two-sided market, which is lower band, middle band, upper band. The bears are in the bulls are in the process of utterly blowing that. They look pretty good here. They look like they don't look good here. So that's the way the day really lays out. This is a very good development for the bears. The lower low versus yesterday is a good development for the bears. They've got a whole lot of time to continue to press and bleed this to the downside. If they don't close it below the weekly pivot, it's not the end of the world. We're not closing it at 3,800. But closing it below the weekly pivot would be better. So I'll be interested to see how that plays out. Now notice I said I'll be interested to see how that plays out. I don't care if they do it or not. And I'm not predicting that they're going to do it or not. That's the difference between throwing out predictions and targets that aren't going to make anybody any money and just saying, look, trading plans that do well are a set of either or propositions. They're like branches on a tree. Look, and I'll give you an example. Either we're going to hold the 9-day or we're not. If we hold the 9-day, then we need to think about getting long in the 9-day back up to the 20-day. Either this high right here is going to hold or it's not. If it does, great. Look, we're short from 85s into the close yesterday, and we just have a runner working. So, we're kind of in a wait and see. We're pretty happy with that. So either this high is going to hold or not. If it doesn't, then we got to be long here because there's an opportunity for them to go to the upside. So either we're going to continue to bleed and make lower lows or not. If we do, then we're just going to hold this runner and let it go. So it's like, not like we are going here or we are going. You don't know. You don't know. I don't know. Nobody knows. That's why we come into every day and we just look to hit our number. And, we just hit our number, and it's all about consistency. It's about respecting risk, and it's about letting winners work. And it's been, oh, man. It's been 10 years of that. That'll work. Volume weighted average price, 36.61.5. Proprietary moving average, 56.5. Hourly mid is coming in 74.5. If the bulls get any kind of juice today up above the 9, that's certainly going to get tested. What they do with it when it gets there becomes very interesting. And in the bigger picture of the week, the bulls, you just literally the weight of the world gets on their shoulders when they get up around that 3,800. Between Fed speakers and everything else, it gets to be a lot because there's a lot going on. So 36.10.75. I'll be very curious to see how that pans out. If we end up in a larger range between some number down here and the hourly midband, that's not the worst way to spend a Friday. There's enough elbow room in there to get your stuff done. But what I would say is, I say this to my subscribers in the room every week, we don't need to be over trading on a Friday. We take care of all of our stuff. Well, this week we took care of it on Monday, and we've taken care of it every day since. So when Friday afternoon rolls around, we don't need to be chasing performance and trying to make the market exciting for ourselves. When you make the market exciting just for yourself, it tends to be exciting for you and not in a good way. Not in a good way at all. We're typically flat into the weekend. I don't see why this weekend would be any different. So we'll see how all that goes. Everybody have a fantastic rest of the day. Have a fantastic weekend. Be safe, be healthy, have fun, take care. Watch a lot of football. Sports Equinox was yesterday. That was pretty cool. And be good. I'll see everybody Monday morning. Take care.